Here's three reasons why capping credit card interest rates at 10% would be terrible for the economy. Let's talk about it. Now, if this is the last thing you try to hear because you got high credit card debt, make sure you stay to the end of the video so I can show you exactly the best way to pay down your debt. Number one is banks would tighten up their underwriting crazy. Y'all that don't know, when you apply to a bank for any credit product, either it be a credit card, loan, mortgage, whatever the case may be, you go through a thing called underwriting. Underwriting is essentially when the bank goes through your credit report and your history of paying things back on time to see if you're eligible for the credit product you had applied for. Now, credit cards, specifically unsecured credit cards, are one of the riskier things banks can lend out because there's nothing securing the card. If you default on the card, there's nothing that the bank can take from you that could make you want to pay them. This is why credit card interest rates are so high because it's very risky. Interest rates are determined by the risk that the bank is taking on by giving you money. If we cap credit card interest rates at 10%, the banks are going to say, screw it, the risk is not even worth it anymore. We're going to stop lending out a lot of credit cards to tighten up our underwriting. Second is we would see a significant increase in our rewards and cash back benefits. This one's pretty self-explanatory. Since the banks would essentially be making less money since interest rates are capped at 10% for credit cards, that means we most likely are not going to see the rewards and the cash back that we usually get from our cards because the banks simply can't afford it. On top of that, going back to my reason one, there's going to be less people with credit cards in the first place. So the overall pool of revenue that could be coming in is going to be cut down substantially. Last but not least is this will cause more people to turn to predatory lending. We all know the US literally runs on debt, including us as consumers. So if people aren't able to get their debt from the normal traditional bank or credit union, they're going to find it somewhere else that could put them at risk physically, financially, etc. People aren't able to get access to credit cards like they usually do. They may turn to payday lenders, which have even crazier interest rates than what we see now. Title loans, which could risk in whole properties, pieces of assets being lost by people, or worst case, loan sharks that could really actually cause you harm if you don't pay them their bread, respectfully. But overall, I don't think capping interest rates is a good thing for the economy, but I do understand credit card debt and high interest debt is a big problem in America. That's why we teach specifically at Think and Gen Wealth the avalanche method. Y'all that don't know, the avalanche method is when you focus most of your income towards a credit card that has the highest APR or interest rate, so that way you could pay it off as fast as possible and then move on to the second highest APR, so that way you're paying as little interest as possible while paying down your debt. The thing is, this method only works if you have a community that actually helps you stick to the plan, so that way you can get out of debt as soon as possible. If you're looking for that community to teach you anything financial literacy, make sure you tap that link in our bio for our Discord. It's D-War. I'm out of here.